In this video, I'll show you how to maximise your 2026 tax return. Most Australians miss deductions they're legally allowed to claim, and that can cost you hundreds or even thousands. So I'll show you what still matters this year, what to avoid, and the biggest deduction most people either miss or claim the wrong way. Quick disclaimer, this is general information only and it doesn't take your personal situation into account. So check the ATO rules or speak with a registered tax agent if you're unsure. If you've got a PAYG job and a side hustle, pay attention. A lot of these expenses can still count, but only for the income they relate to, and you can't double dip. Tip number 1. Let's start with what changed this year and what doesn't apply yet. The extra personal income tax cuts start from 1 July 2026, so they don't apply to the return you're lodging now. The latest 2026 federal budget also announced proposed changes to negative gearing and capital gains tax, but those changes are not law yet and don't affect this return. Tip number 2. You can start your tax return from 1 July using your MyGov account link to the ATO, but I'd wait until mid-July when your employer has finalised your income statement and your pre-filled data is ready. That helps you avoid mistakes and reduces the chance of ATO follow-ups after you've lodged. If you lodge your own return, the deadline is 31 October. If you use a tax agent, you usually have until 15 May 2027. Tip number 3. You can claim up to $300 in work-related expenses without receipts. If your claim is over $300, keep your receipts. And if you're not sure, keep them anyway. A tax agent can help and their fee is tax deductible next year. Without receipts, I can claim $299 of tax deductions, which increases my refund by about $103. And don't forget, the big tax tip is coming at the end, and it's one of the most powerful deductions, and most people will either miss it or claim it the wrong way. Tip number 4. If you work from home this year, you can claim a 70 cents per hour tax deduction using the simplified fixed rate method. This applies to work you actually do at home, not personal use. To claim it, you simply need a record of your hours, and that can be a diary, a calendar, or timesheets. You don't need a dedicated home office, just a record of the hours you actually worked from home. If I worked 1,252 hours from home, I can claim $876, adding around $302 to my tax refund. Tip number 5. If you earn extra income on the side or you use your car for work travel, this next one matters. The easiest way to claim car expenses is the cents per kilometre method. For 2025 to 26, it's 88 cents per kilometre, up to a maximum of 5,000 work-related kilometres per car. So if you drove 3,200 kilometres for work, that's a $2,816 tax deduction. Just don't claim your normal trip from home to work. That part's not deductible. Tip number 6. If you use your phone or internet for work, or even for a side hustle, you can claim part of your bill. The ATO allows a reasonable estimate, or you can keep a 4-week diary to work out your work-related use. For most people, that ends up somewhere between 10% and 40%. Tip number 7. If you sold shares, crypto, or property, you need to include any capital gains and losses in your tax return. If you held the asset for more than 12 months, you may be eligible for the 50% CGT discount. That still applies for the 2026 tax return. The proposed budget changes don't start until 1 July 2027. Tip number 8. Here's a simple optimization most DIYers miss. If you used a tax agent last year, that fee is tax deductible this year, even if you lodge your own return now. Tip number 9. This won't apply to everyone, but if it does, it's an easy claim people miss. You can claim up to $150 for work-related clothing, laundry and dry cleaning without receipts, but only for protective clothing, compulsory uniforms or items with a logo, not everyday clothes. Tip number 10. If you pay union fees or belong to a professional association, you can claim the full amount. These are often pre-filled, but not always, so it's worth checking. Tip number 11. If you pay for income protection outside super, it's tax deductible generally. Just remember that life insurance, TPD and trauma cover are not tax deductible. Tip number 12. If you received franked dividends, make sure you claim the franking credits attached to them properly. Those credits reduce your tax, and if your tax rate is lower than the company tax rate, they even help create a refund. Tip number 13. If you have private hospital cover, make sure your health fund statement is included properly, because it affects your rebate and whether you pay the Medicare levy surcharge. If it's missing or entered wrong, the ATO may adjust your return, and it could cost you. Alright, here's the big tip I mentioned at the start. The self-education deduction is one of the most powerful deductions available, and most people either don't know about it or don't claim it properly. If you take a course that directly relates to your current job, not a future job or a career change, you can claim things like course fees, textbooks, stationery, equipment, travel from work to your course, internet and computer use for study. This can easily add up to hundreds or even thousands of dollars in deductions. And because it's directly tied to your current job, the ATO generally accepts it when claimed correctly. If you're looking to upskill, this is one of the best tax efficient ways to do it. Before you lodge a return, here's the main takeaway. Know what's changed, wait for your pre-filled data, claim the deductions you're entitled to, check the smart money moves most people miss, like phone and internet, CGT and tax agent fees, and don't overlook self-education if it directly relates to your current job. If you want a simple way to make sure you don't miss anything, download my free 2026 tax return checklist from the link in the description below. And if you want to keep more of your refund, watch the next video on screen now. If this helped, subscribe and leave any questions in the comments.